In today's video, we're going to discuss how my Yieldmax dividends will work in a bear market, especially when using margin leverage. I have 5 key points that I'd like you to consider. Yieldmax, Cornerstone, and Defiance dividends help us earn over $300,000 per year in dividends, as you can see below. And our performance value shows that we're up 18% for the year. So I don't get the arguments against Cornerstone and Defiance. Clearly, we're outperforming with Cornerstone and Defiance. We're up 18% for the year. The S&P is up 9, the Nasdaq's up 8, the Dow's up 4, and the Russell's up 2. So we're beating all of the indexes on a year-to-date basis, again, with Cornerstone, Yieldmax, and Defiance, and they help me live the FIRE lifestyle, which means financially independent, retire early. If you want to live free from a 9-to-5, email me for my e-guides at akentod48@gmail.com. So again, I love Yieldmax. I own Cornerstone, Yieldmax, and Defiance funds primarily, but why does no one think of what will happen in a downturn with Yieldmax? I do love them. I have about 100K worth of Yieldmax, but come on, let's be realistic here. Has anyone ever seen a bear market? Most stocks fall huge in comparison to the indexes. So I'm going to tell you why you need more Defiance and Cornerstone than Yieldmax in order to live the FIRE lifestyle, because you need to be aware of what will happen to your portfolio in a bear market if you don't diversify away from Yieldmax dividends. If you're a newcomer to this channel, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this 1.5 million in purchasing power to get ahead. All the greats that I know have used debt to get ahead, and my dividends of around $300,000 will pay back my debt in less than 1 year. So I don't understand why people are so fearful of margin when your dividends can pay them back. And also, for every $1 you put in your account, you get $4 of purchasing power, like I just said. And I'm just using a fraction of this. So if you just use a small amount of debt and you have your dividends pay that back, well, you're just going to grow faster than you were going to grow before, but without much risk, because we keep our available withdrawal high. One reason why I don't like Yieldmax funds and I like Defiance more now is because Yieldmax has high available withdrawal. So QQQY, as you can see here, has 30% maintenance, whereas if you go to YMAG, you'll see that it has 50% maintenance, and this is a killer in a bear market. If you need help understanding maintenance, that's in my Volume 3 e-guide. So 50% maintenance, if you have all Yieldmax stocks and they fall, which Yieldmax stocks fall by the amounts of the stocks, not by the amounts of the indexes, because they sell calls and they sell puts to mimic the share price movement to the downside. So I don't know why people aren't more scared of Yieldmax stocks. If you have NVIDIA, of course NVIDIA is going to outperform Defiance in an up market. Of course, Microsoft is a great stock and it's going to outperform Defiance in an up market. But what about a down market? Have you guys ever experienced a down market where stocks can fall 50% plus, but the indexes only fall 20 to 30%? Have you ever experienced something like this? Because I have, and it's brutal, okay? I don't like being in stocks during market downturn. And when you have available withdrawal and you're trying to live freely out of your brokerage account, well, 50% maintenance at Yieldmax is a killer, because once they fall by 20 to 30% in a given bear market, your available withdrawal is already sucked in half because it's 50% maintenance. So you're going to cannibalize your account much faster with Yieldmax in a down market. So you need to have a combination of Yieldmax, Cornerstone, and Defiance. Cornerstone actually helps me outperform in down markets because it's a 4-star fund. It has a 21% dividend that it drips at the NAV. So let's just say you own Cornerstone here and the dividend is 21% and you own it around these levels. Well, it's going to drip the dividend down at the bottom down here for free money every month. So that's how I get ahead in bear markets, is because Cornerstone dollar cost averages for you on the dips. So how are you going to dollar cost average and buy the market on dips with Yieldmax? They don't drip at the bottom like Cornerstone does. So this is how I use margin and outperform in down markets, is I use Cornerstone because it drips the dividend down at the NAV. But with Cornerstone, look at it on a chart. It has a 10-year chart here that you can see it goes sideways to down. But if you go to a chart on Morningstar, you'll see that it actually goes upward left to right on its chart. That's because you need to factor back in dividends, the special drip, and rights offerings. Most closed-end funds have rights offerings, and Cornerstone is no different. So if anyone tries to show you statistics about how Cornerstone can't beat the S&P, well, they're not factoring back in the premiums between the rights offerings, okay? Cornerstone averages 20 to 30% premiums per year, and it gives you a 21% dividend per year, and it drips that dividend down at the NAV. You just have to play Cornerstone properly around its rights offerings, and that's in my Volume 4 e-guide. When you buy my e-guides, Discord access is free for life, and we alert you of the Cornerstone rights offering announcement here in the Discord chat room. We have almost 1,000 members here pursuing the FIRE lifestyle who can help answer any questions you may have about your brokerage account that either I or your broker can't answer, because most brokers don't know about Cornerstone and the special drip, and a lot of brokers don't even know what maintenance is. So if I can't answer your questions about your brokerage account, someone in Discord most likely can. So that's how I get ahead in bear markets. I use Cornerstone because it drips at the NAV. Also, Cornerstone sets its dividend every year at 21%, and it does not change. Yieldmax dividends change, okay? If we go to a YMAG snapshot here, you'll see that YMAG's dividends fluctuate, okay? I don't need to go through the dividends here. You could go look at a chart yourself and go put on the dividends here, but you know that they fluctuate every month. If the stock price falls, well, then the dividend falls. In Cornerstone's case, they keep the 21% dividend set every year at that NAV. So you're getting 21% dividends in Cornerstone guaranteed each year, whereas with Yieldmax, you never know. In the event of a bear market, you could see your dividends cut in half. On top of the 50% maintenance that Yieldmax has, you could see your account fall huge because stocks have huge drawdowns, and Yieldmax makes it to where their stocks mimic the actual stock price drawdowns, so you can get huge drawdowns in your account in a bear market, and you have 50% maintenance for Yieldmax, and their dividends get cut in the event of a down market. So Cornerstone keeps their dividends set every year at 21%. Yieldmax will cut their dividends in a downturn, and Defiance dividends, well, they actually go up in a downturn. Perhaps. People need to double check on this point for me, but when I sell puts in my portfolio, I make sure to sell them when prices are down because the premiums are higher. So I've always noticed my income goes up when the market goes down and I buy more Defiance. This is because perhaps they sell puts, so in a down market, you could actually see your dividends grow since they, again, sell puts, Defiance. So with Yieldmax, your dividends will get cut, but Cornerstone keeps the dividends the same, and Defiance could actually grow their dividends if they're selling puts, and as the stock prices move lower, the premiums go up, so they sell those puts and net higher premiums, and that translates to higher distributions every month for shareholders. Again, please double check on this point. I'm not saying that this is true for Defiance, but I just think that that is possibly a cheat code. If you're falling with your dividends in a down market, well, then you don't want to have dividends get cut. But with Defiance, they could actually, again, grow those dividends. So please double check on that for me. All I can tell you for sure is that Yieldmax dividends will fall in a bear market, and Cornerstone dividends will stay the same. So again, I love NVIDIA. I think Yieldmax and NVIDIA and many of those stocks within Yieldmax will beat Defiance and even Cornerstone in a given year in an up market. But what about a down market? Okay, semiconductors fall huge in down markets. Another thing I like about Defiance, which I mentioned in past videos, is that it can actually go up on down days. Last Friday, the NASDAQ was down and QQQY was up. Also, today, the NASDAQ was up 0.29, as you can see above where my mouse is, but you can see QQQY was up 0.34% today. So QQQY actually beat the NASDAQ on an up day today, and it beats it on many down days. We've been through two corrections with Defiance now, where I've seen in the correction of 2023 and in 2024 that Defiance funds actually outperformed even Cornerstone in a down market. So that's another reason why I like Defiance and Cornerstone over Yieldmax. Is Yieldmax fall by the amount of the stocks. They really hurt me in 2023. They have 50% maintenance. Their dividends fluctuate, but Cornerstone keeps its dividends the same. They have lower beta than other names, so Cornerstone usually falls less than other stocks and funds in a down market, and QQQY actually falls less than the index as well. It can be up on down days, and as I alluded to, Defiance may actually raise dividends in the event of a market downturn, because when you sell puts in downward markets, your premiums should increase. So I don't know why more people aren't paying attention to this fact that Defiance can be up on down days and that Yieldmax can kill you in a down market. Another point I'd like you all to consider is that I go for compounding and margin for my growth over growth stocks. So I don't need Yieldmax for my growth. I get my growth from margin and dividends. So this $300,000 that we get in income, a lot of that is our growth. You can see our performance value reflects this. We're up 18% for the year. So I can control my growth. I can control my destiny by using the amount of margin that I want to use. Okay, I can control whatever I'm earning. If I want to increase my earnings by $10,000 per year, I can just add to my margin. But I do have to watch maintenance. I have to have low maintenance names, so I keep this available for withdrawal number high. We have to be able to withstand over 20% corrections in the market and still withdraw freely out of our account, because we want to live free from a 9-to-5. We don't care about working a job ever again. I'm never going back to a job unless it's on my terms. So the only thing that I care about are down markets, because in up markets, we're going to outperform. We buy the indexes, but we use use margin leverage. So of course we're going to outperform in up markets. It's how we perform in down markets that I worry about. And if I have too much Yieldmax, I'm going to get creamed in a down market. But if I have more Cornerstone and Defiance, well, I'm not going to get hurt much in a down market. That's how we actually outperform on down days, because Defiance will be up on down days, and also Cornerstone will be down less than other funds once again on down days. Plus Cornerstone drips the dividend down at the bottom, so it's dollar cost averaging for you at the bottoms, whereas Yieldmax does not do anything like that. Either does Defiance. But I still like how Defiance outperforms on down days, and it's the entire index, whereas Yieldmax is either one stock or a group of maybe 10 or 20 or 30 stocks. I like Defiance how it has the entire index, okay? QQY is the entire NASDAQ, JEPY is the entire S&P, and IWMY is the entire Russell. Yes, again, in up markets, Yieldmax may win, but in down markets, what's your account going to look like? I just want to stay away from margin calls to live the FIRE lifestyle, which again means financially independent, retire early. We're nowhere close to receiving a margin call. We can withstand over 20% corrections and still withdraw freely, even though we have this debt. I can swipe my E-Trade credit card and go wherever I want in this world, even with this debt once again. And you don't have to apply for margin. It's already granted to you in your brokerage account, and it doesn't show up on a credit check. So I can control my destiny with this margin, and I can control my growth. I don't need Yieldmax growth to get that. That's how, again, we're outperforming the markets year to date, up 18%. So the compounding I receive by having 400,000 in Cornerstone makes me a lot more money than growth stocks ever could. If I have 400,000 in Cornerstone and I get a 10% return, that's 40,000. If I have 40,000 in a growth stock, I have to have 100% return to get 40,000. I don't like that kind of risk reward. I prefer to be in the indexes and be really safe, but then grow through compounding. I like to be in the indexes and I like to be safe, but I like to grow through compounding, not through growth stocks. Compounding and dividends. Compounding and margin in the indexes may be boring, but they supplement the growth from an NVIDIA, in my opinion, without the risk, because they're more protected by the indexes and headline risk. By the way, YMAG, FEPI, and YMAX aren't diversified enough, so please don't advise me to buy them instead in the comment section. So this is why I prefer Cornerstone and Defiance over Yieldmax in the event of a bear market. Yieldmax is going to fall much harder than indexes because they're stock specific. They're going to have their dividends cut. They have higher maintenance. And why get growth from risky stocks when you can get your growth from compounding and margin, which then your dividends pay back your margin, so your leverage goes away and your risk goes away. And lastly, Defiance has proven that it's outperformed itself in the last 2 corrections. If you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, Discord access is free for life, as well as my phone number, so just keep this in mind. Also, if you want to follow my portfolio to see how I'm getting this outperformance, just click the join button on my wall, or I'll link that in the description below. And I'll talk to you soon, everyone. Thanks.